Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Hey, good morning. Welcome to the morning brief. Today is Wednesday, February 15th. So why do we go through this morning briefing? Basically, we're doing a morning routine to help you to do the same things every day so you don't miss something. So you're prepared for the day. So first thing we do is we look at the news. So what do we have? We had the 8:30 news this morning. We had core retail sales month over month was 2.3%, much greater than expected at 0.9. Empire State Manufacturing, this is the New York area, they have very high costs, labor costs for manufacturing, and they were much better than expected. A minus 18, and they're only a minus 5. So very good news there from the retail, or I should say for the manufacturing section. Retail sales month over month were 3% versus 1.9 expected. Again, very, very good. News for the economy, bad news for inflation. So, this is a situation where good news is probably bad news. We'll have to wait and see how the market reacts to it. But that being said, if the retail sales continue to do well, even with inflation, which means inflation is going to go up more, which means the Fed is going to raise rates more. And so it clouds the vision, obviously. We have the ECB President Lagarde speaking at 9 a.m., and virtually that is it. From a heavy-duty news, we still have a lot of U.S. news that are yellow: capacity utilization, industrial production, business inventories, housing market index, crude oil inventories, and the TIC long-term purchases. These are all yellow items, which are not expected to affect the market. They're low impact. So I'm not paying too much attention to any of these. Unless you're a crude oil trader, that is going to move the crude oil market. And it doesn't affect the dollar or the U.S. markets, but it does affect the crude oil. So pay attention to that if you're a crude oil trader. Next, we go to look at charts to see if the charts can give us some sort of idea as to what is going on in the market. So we first start with a higher time frame. We go to the daily chart, and you can see that yesterday we had basically a doji, but it was on higher than average volume. What is the pattern? I always say, what is the pattern? What is the pattern? I ask that question of myself every day, 100 times a day. What is the pattern? If I can recognize the pattern, then you have a huge, huge advantage. What we've got here is a kind of a stair-stepping higher. Looks like we're reloading to go up again. We went up to this previous double top, previous high over here, and rejected off of that, and which is what you would expect it to do. But it is also rejecting off of this little band of consolidation. So we're basically going sideways here with a bias to the upside. So let's take a look at the inventory, or in this case, we call it the order flow cumulative delta. And we look at what's going on. So this is a situation where we're looking at the net buying and net selling, the key word there being net. And so Monday, we had positive inventory growth. We had positive price action. On Tuesday, we had price action that was all over the place, but ended the day just very, very slightly positive. But we were very positive, 10,000 inventory versus, there's the close. We were up yesterday, but only very, very slightly. But a big move in inventory. So the numbers yesterday were good enough where once the market reacted, they really put more on. A lot of people are opening new positions because inventory increased pretty substantially. Today, market is down slightly, and we did have a big reaction. to the retail sales number. We'll show you that in a second. But so far, the market seems to like it. Even though we're down, inventory is up currently. So we'll see if that holds once the market opens into the main session. Taking a look at the intraday, this is a 7-minute chart, ES. Here's the 8:30 number. We basically got a big down. They came back up, piddled around here, and now they've gotten back above where they were prior to the news event. So on balance, the reaction was positive, at least so far. I'm not sure how you can look at that as being positive, because increased retail sales is going to get the Fed's attention. They're going to feel like they need to step on the brakes even more, because the retail sales is going to fuel inflation. It is what it is. And that's all we've got. So then what else do we have to look at? We have the Stock Traders Almanac, which is a pretty thick book, gives all kinds of statistics for the market. And we have a 66.7% chance the market will be up today. 66.7%. Again, that's a historical average, a historical bias. And we use that to sort of say, hey, this is the bias. The bias is bullish. As additional information to looking at the charts, et cetera, et cetera. Hope you guys have a great day. Happy trading. I'll see you guys tomorrow.